Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what impacts mortgage rates on a daily basis, whether it might come from the economic calendar or a combination of that with headline news or geopolitical. But sometimes it can get really confusing out there where good news is now bad news and vice versa, where, such as the market sentiment changes and catches a lot of people by surprise, and people just get a little perplexed as to what's going on here. We try to get into all that and give you uh, the sentiment, what's behind the market and investors, and what's driving those, and where they're going from there. So hopefully you get the information you're seeking by these videos. A little bit about myself is my name is Mike again, and I am a loan officer. I work with a national lender. We lend in all 50 states. So we'd love to be of service to you. If you're looking to refinance or purchase, so please reach out. Uh, but more than that, we like to be a resource for you folks. If you guys are looking to have any questions about anything, please feel free to ask. We're here, again, to try to get that information for you guys. But so to jump into it, we'll start with the economic calendar. We get the weekly report by the MBA, which is the Mortgage Loan Activity Report. This is something I kind of like to glance at just to kind of gauge as to which direction mortgage loan applications are, if we're seeing an increase in purchases and refinances or both. Um, so as we can see here, a glance here, we can see a slight uptick in purchase loan applications, which is good news. And then same thing at the refinance. The rates dipped a little bit, so we see a slight uptick in the refinance. But here's the big one for today. This is the GDP, the final revision for Q1. The initial one came in at 1.5%, or down 1.5%. Forecast is supposed to be unchanged, and it worsened slightly, being down 1.6% instead of 1.5%. So the final revision for Q1 was a drop of 1.6%. So of course Q2 will be of interest, as many people think that will be much better. But again, we'll wait and see uh, where that goes. Uh, Markets. Let's take a look here, and mortgage-backed securities are doing much better today. Yesterday actually turned out to be better than we expected. We were down most of the day. At the very last moment, we actually closed up 3 basis points. So we were kind of hanging around minus 8, 11 basis points. Even started the day lower than that. So many lenders came in with worse pricing. Uh, but uh, but we got a slight improvement, and that market kind of followed through today. We're up about 17 basis points currently. This is on the eve of PCE report being released tomorrow. That will be our big report for this week. If you recall, about 2 weeks ago, the CPI was released, and the market basically did not like it. It came out pretty negative, and both the stocks and bonds reacted quite negatively. And this is what was the result. We had that steep losses. As you can see here, since then we've been kind of steadily trying to work our way back, but we still haven't regained those losses we got from that CPI report. And PCE has more weight because that's actually the Fed's favorite gauge. Now today, the reason why it's up is that there was some uh, good news out of Germany in terms of inflation data. It came in a little bit more positive. So there's anticipation, or investors are anticipating that perhaps maybe it might come in unchanged, or, um, or maybe slightly better here on the PC report. So you kind of that's why you're seeing a slight improvement there. But we're also having some of the major central bankers meeting at a forum and talking, as Fed Powell, speaking Lagarde from ECB, Bank of England, and many others are speaking, and so that's having some positive effects with the markets, as well as they kind of try to talk about how they're tackling inflation and stuff. So again, what does this mean? Well, just in the last moments, it just jumped up to 25 basis points. So we're up now a quarter point in basis points, which basically improvement quarter points. So we could continue to see more price improvements as the day progresses if we can keep with this pace here. So what does that mean? Well, we're going to see a nice improvement in our rate sheets here. Maybe even see an eighth of a percent in the rate improvement from where we left off yesterday on that. So let's go ahead and take a look at what the yields are doing today, and those have also dropped. We took at 3.2 held, and that's kind of pushed us down now to about 3.11. So that's good news right there. So we're kind of getting closer to the 25-day moving average on the yields. We're still a little bit of a ways in terms of the mortgage-backed securities, but yields we've dipped down a little bit further down to the 3.11 basically. So last but not least, we'll touch on what's the average conforming rate out there. They do have points built in, and they are a day delayed in terms of what the rates were. So these were kind of based on yesterday's results. So the 15-year, I'm sorry, we'll start with 30-year fix at 5.95, and the 15-year is at 5.3 now. Those are the average rates out there. So check with your loan officer for what rate would be suitable for you or what works for you. If you would like, we can certainly accommodate that for you folks. If you guys got any questions about rates and what you're looking to do, we can be more than happy with that. We do got some great loan programs out there, including our 7-1 ARM, and then we also have the ability, if you're looking to buy, we could do a 2-1 temporary buy down where you basically temporarily reduce your interest rate for the first 2 years. So let's say if the rate is 5% today, we can go year one at 3%, second year at 4%, and then the remaining at 5% from there. So that's kind of how it works. So if you're interested in something like that, that could be a great program as we're kind of reaching a peak here in terms of where interest rates and home prices have gone, and sellers may or may not be willing to cut prices. So this might be a nice alternative to keep your payments low initially and help you to get into the property and maybe give some time for rates come back down again a little bit. All right, folks, again, we're here to help you guys out. If you guys got questions about anything, please reach out. If you can help us out, we would greatly appreciate if you can share and like these videos. It helps our channel out, and we would greatly appreciate it. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Take care. Bye-bye.